Hello everyone, welcome back again to the last video of depreciation. Here we will discuss about the different accounts we need to prepare in the depreciation chapter. In your exams, you will be asked to prepare these three accounts. First, the asset account. Second, the accumulated or provision for depreciation account, and the asset disposal account. Now let's move on to the first account, which is the asset account. In the asset account, we need to first understand how we should treat assets in accounting. If we recall the EDA-CLIP acronym, we can see that when assets increases, we make debit entry, and when asset decreases, we make credit entry. Now we need to identify why our assets might increase or decrease. Okay, assets usually increase when we buy new assets, and these buying of assets might be in different forms, like buying assets in cash, buying assets on credit, and exchanging old assets for the newer ones. Okay, there are no other ways to increase the assets. On the other hand, assets will decrease when we actually dispose the asset or we sell the assets to someone else. Now moving on to the account. As an increase in asset have a debit entry, therefore the opening balance will be on the debit side and the closing balance will be on the credit side. Okay, now we need to enter the items that increases the assets in the debit side. So as asset increase as a debit entry, so all the item that increases the asset will comes into the debit side, which is the acquisition or buying of new assets, and we will record the items in accordance to the mode of transaction. If it is for cash, we will write it for cash. If it is on credit, we will write accounts payable, and if it is an exchanged for an new asset, then it will be recorded as disposal. Similarly, on the credit side, we will enter the items that decreases the asset, so which is the disposal, but we must make sure that we record the item at its cost, not the price at which we are paid by the buyer of our assets. Okay, now let's move on to provision for depreciation. Before that, we need to understand what is provision for depreciation. Provision for depreciation is the total amount of depreciation that asset has incurred till date. Now this amount will only increase if the depreciation of the existing asset increase, and it will decrease if this asset is sold to someone else. Okay, like any provision, the increase in provision will have a credit balance and a decrease in provision will have a debit balance. So the balance BD on the provision will be on the credit side and balance CD will be on the credit side. These are the first two things which we must remember while preparing the provision for depreciation account. Now, as the depreciation for the year increases the provision for depreciation, it will be entered on the credit side. It will be entered on the credit side. This is the depreciation for the year, and this will increase the depreciation, and the assets which we have sold or disposed, the total depreciation of that asset will be recorded on the debit side because it is reducing the provision. Okay, and then we need to balance off the figure, and we will get the balance CD. And please don't forget to enter the balance CD as balance BD. This will be on the credit side of the provision for depreciation account. Okay, now let's start the final account, disposal account. This is the account where we record the disposal of assets, meaning the selling of assets. Okay, and in this account we actually find how much profit or loss we have made. Profit or loss we have made during selling of asset. For this account we will require three items. We need to identify these three items first. Number one, the cost of the asset sold. Number two, selling price of the asset and their mode, and the mode of transaction. And three, the provision for depreciation of the asset sold. That means total depreciation of the asset. Okay, if we look into the account carefully, you can see that the debit side of the account will record the cost of the assets, and the credit side will record the benefits that we have received from the assets. And usually we can see that asset cost is our cost of the asset, and the provision for depreciation is the benefit that we have received from the asset while using, and the cash, bank, or the account receivables that we are getting is also the benefits we are receiving from the assets. Okay, and the balancing figure will be our profit or loss. If the balancing figure is on the credit side, we are having a loss. If the balancing figure is on the debit side, we are having profit. Okay, this will end our series of videos on depreciation. Hope you found them useful. If you need any other tutorial on any other topic, you can comment on the comment section and I will try to make them. Thank you all and goodbye.